Hello, you're listening to the Small Business Show. My name is Swire, the host of your Small Business Show. My guest today is Dr. Gregory Bott. He is an entrepreneur, investor, and university instructor. At the age of 24, he quit his full-time corporate employment in pursuit of both higher education and entrepreneurship. Since then, he has owned and operated numerous businesses across multiple industries, including hospitality, real estate, and agriculture. His business has ranged from franchise to independent, from startup to acquisition, to heavily staffed to one-person operation, from leverage to debt-free, from sole ownership to numerous shareholders. He's also the book that I've just finished, Faster, Safer, Wealthier. Welcome to the show, Greg.
Thanks, Swire. I'm looking forward to this one. Definitely been listening to your podcast, so you got some really good guests. So looking forward to today.
Would you please let the listener know about the reason why you wanted to write this book, and do you think that's you have to tell people more about your journey and about why it's much safer to buy a business instead of starting one?
Sure. So I guess I've kind of had businesses for the last 15 years. That my experiences had always been with the startup, and we've had some successes, and they've been really purposeful, and I've got a lot out of those. But with the startup, we've seen a lot more like challenges and kind of this variability in your wealth and this unpredictability. So in our maybe a couple of years ago, 2-3 years ago, we did our first acquisition, and I just remember leading up to that, I was a bit anxious and nervous. We really tripled the size of our company overnight, so we took on and purchased a competitor that was twice our size, and I was just used to the startup and used to all the things that can go wrong when you start a business that's unpredictable. So 2-3 weeks after this, I just remember looking up at my business partner and saying, that was a little bit too easy, or everything just went well. And what I didn't realize is that we had brought on staff that were competent. We had brought on their systems and processes and structure. There was a history to it. So just a lot of the things that can go wrong in the startup are mitigated for in the acquisition. And then that led to, we wanted to create a playbook that we could repeat. So continue to grow our business with acquisition. So I started to do a manual for myself and to do this. But as we kept going through this, and over the next year or two, I had read, the first year researching this, I'd read maybe 120 books on it, and just realized that there's so much more to this topic. And I just wanted to make this discussion available for other people to replicate. And because there's really so many benefits of the acquisition. And from that, a book just naturally evolved as I realized I had more to share in this relationship between acquisitions, and not just wealth accumulation, but more so wealth retention, because of some of the things that come with an acquisition.
So you're saying you started by chance, but then you really like the process. Now it's being a passion of yours.
That's right. And we're definitely starting to look at more. So growth through acquisition in terms of our existing company, if we can tack on companies to that platform, but also look at, even companies that don't necessarily have a synergy with our existing one, just because there's so many benefits. And when we think about entrepreneurship, the problem is we tend to think about entrepreneurship and the startup as synonyms, because that's what we hear over and over when we go to networking or when we read news articles. We always see this really interesting and sexy story of the startup. And, you think about Elon Musk and Richard Branson, Zuckerberg, all these individuals started really in their parents' basement or at a really young age, and they were billionaires by a young age. And that's what we tend to hear in the media. And those are the stories that we think about when we think of entrepreneurship. But the problem is they're actually not the norm or not the data. They are really the outlier stories, but they're just interesting stories. So that's what we tend to think about. But the reality is the startup isn't really as good of a palatable or risk reward trade-off compared to an acquisition. So when we think about an acquisition, there's things that you get with an acquisition that you wouldn't with the startup. And these things provide this level of security or risk management or risk mitigation. And for example, with an acquisition, you get a recurring revenue stream. So this is really a proven history and it's predictability. So you actually have data to analyze when you make that decision, where with a startup, you're really making a lot of very significant, bold assumptions. And sometimes even the most educated assumptions are really guesswork. The next thing that you'd get with an acquisition is a proven customer base. So you know that these customers like your product. It's been proven. We know their buying history, there's buying frequency, the amount that they purchase, their purchasing patterns, which is really a guess with an acquisition. The products and services, they've been tested, they've been refined. They're proven that your customer base likes these particular products. You have a complete team, so you're getting this leadership team, really inheriting it or getting it along with the purchase, and they have relationships with your customers, with your vendors, among themselves. They understand the processes. But one of the biggest things that you're getting is the proven processes and systems that come with it. So if you can maintain that and just make simple tweaks to that, you really have this sustainable business that has a number of these risk mitigation factors or this moat around your business to protect it. And when you compare that to a startup, the startup is really, essentially gambling. So, there's a lot of successful stories in the startup, and, maybe you can talk about your own, Swire, but it just, when you compare the two, a lot of times the acquisition just has a completely different success rate because it has all this proven history and you're getting all these processes and refinement with it. So it's more palatable from a risk reward perspective when you think about it, not just with an entrepreneurial hat, but with an investor hat as well.
Well, so many questions from what you just said. And I think I attend a lot of meetings, right? I am very active in Chamber of Commerce, and I've been to so many meetings that, show you and teach you how to start a business, how to, create a new, passion for yourself. But I don't think I've ever been to a meeting at all to how to purchase a business. If so, it will be for a franchise opportunity and not, in your particular way that you describe in your book. Why is that? Do you think, there aren't many experts who like to do that? Or people just think that if I am a founder of a startup, I'm just more sexier?
Yeah, that's a really good question. And I don't have the whole answer to that. And that's partly the driver on the book. And I think when we think about acquisitions or mergers, and I think our mind gravitates to large public companies that take over another, $1 billion company takes over another $1 billion company. And I think that's where the narrative has been with the acquisitions. So when you and I think about that, when we think about entrepreneurship, we don't necessarily gravitate to that because we don't see ourselves, if we look in the mirror, we don't see ourselves as being part of that opportunity and that culture. But the reality is, and this is partly the driver of the book, is acquisition is really open to anybody that wants to be an entrepreneur and wants to be an investor entrepreneur. And there's, I guess, things that make that a little bit more reality. You don't have to start in a significantly large organization. You can still purchase a relatively small or medium-sized business that has an existing cash flow. And the other part too is people think it's unaffordable because they haven't thought creatively enough in how they capture that cash and using other people's money for that acquisition. And a big driver of what makes it a reasonable thought process or achievable by almost anybody is the fact that vendors are willing to carry a large portion of that purchase, because there's not a lot of buyers out there for businesses, because people don't, as you said, they don't tend to think about that. So there's So there's a lot of companies that are either for sale or would be for sale if you were to approach them. And because they don't have a lot of buyers lined up, because people aren't thinking about this as much as they're thinking about starting, they know that they need to provide certain incentives to the purchaser, whether that be in price or to continue working for the new buyer for a number of months or years. And they know that sometimes banks don't always come to the table in certain types of businesses, especially service businesses that might not have the assets. So buyers over time, once their business sits on the market for a little bit, or they get a little bit more anxious to sell, they realize that they have to essentially be the banker of that. And then I guess lastly is investors. So there's, you compare it to other investments, small businesses can be a great investment. They tend to have a way better risk reward trade-off in terms of a PE purchase ratio. So other people tend to want to also invest in that, but they don't think of themselves as an entrepreneur. They want to keep their day job, so they're willing to invest alongside you as well. You just need to start to have these conversations with people if it's something that interests you.
Yeah, I think in the book you actually point out a lot of good, interesting way to finance the acquisition. Acquisition, we all always think about go to the bank, or we have certain money in our bank account, but then you actually talk about approaching investors, and I actually wanted to share this with you. I in 2012 we actually were in the process of selling our business. So you talked about on the other side, how a small business owner will value their company like their baby. They're not really thinking logically, like thinking about when you're analyzing the money. I just have a imaginary price that I wanted to hear about. Why do you ask that price? That's the round number that I like to be. And I think in that chapter, I could totally agree that what you have wrote in there. So I think, but I think also on the other side, I know that there are individuals that they have the cash available, but then they don't want it to do the day to day. So it's actually good if you are able to find those individuals, so they could be what we call like a silent partner. You are taking on more the responsibility, but you might not have to come up with the amount of cash that initially you have to come in. Would you be able to touch on, since you have been through a lot of times right now, how do you actually start involved in showing other investors know that you might have the skills and ability to able to take on the projects like that?
Sure. And you're referring more to individuals that want to be involved in buy a business, or ones that would invest alongside you?
To show people how they can invest alongside, because right now, for example, we have two paths, right? One path is you go into small business and you build it from scratch. The other way is you have the same skill set, you can actually purchase an existing acquire existing company, which will have the cash flow and have the personnel already, but then it might require more cash up front. So how do you really make the case and network and find the people who can support you?
I think everything is in relation to something else. So if they do have cash, they realize that sitting on that cash is actually potentially working backwards compared to inflation. So people want a place to put their money. So in that case, it becomes a comparative to other options for them. So if you compare it to other investments, you could go down each investment and tick off kind of the pros and cons and compare that to a small business. If you put your money in savings have been quite low interest and really impotent in trying to keep up with inflation. You could compare it to stocks. Stocks, I guess, are similar in that you're buying a piece of a business. But the challenge with stocks is they tend to be a black box. So you can do your research and you can make what you feel is a good decision, but you buy that stock. Let's say you buy Coca-Cola, for example. Once you buy that, you don't have any control over it. You're essentially praying that it goes up. And it's really hard to double the size of a company that is in that size bracket. It's almost impossible to get those exponential gains. So then you start to look at it and compare that to a small business, for example, where a small business, they tend to trade at a lower price per earnings ratio due to, yes, they have lower liquidity. You can't just get out and sell quickly, but they trade at a lower ratio because people have this perception of risk. And the problem is that perception of risk is really there because entrepreneurship has been a synonym to the startup. But when you think back to some of the things that I talked about, what you're getting with an acquisition and how that is really a risk mitigation strategy, that risk is really more perceived than in reality. So you get a larger bang for your buck and a better return on your cash when you purchase an acquisition, because with an acquisition, you're getting a consistent cash flow. You have history to analyze that. You can think through some of those risk mitigation strategies. You can think about and really target in and exactly what you want for that investment. So it really just provides a better risk return if you're willing to undergo that workload, or if you tag along with somebody that you have faith in that can execute this in its proper way.
I really like that. So I wanted to ask you, to give us more about investigating before you buy. And I just wanted to say on the record, you must be a really patient person. There are opportunities that now you can actually wait it out and get to the right timing before you make your move. Like, how would you suggest someone who might be intrigued with this idea for acquiring a business to start looking, and where should they go start finding the opportunities for themselves?
Yeah. And I think it has a lot of synergies and similarities to lead generation. So if you're in your own business, if you want to grow your business organically, you're going to have a lead generation process where you think, okay, if I were to need another 10 clients this month, and I have a 10% close rate, I need to start with 100, and you work backwards on that pipeline and advertise and put your money in your efforts where you think you will have the best return for those efforts and the best conversion rate. So you follow similar philosophies, except for maybe where you go and where those lead pipelines come from are a little bit different, because they tend to be a lot more relational than transactional. So they tend to be, larger PE companies might have ads and websites, but reality of, yourself and myself, it's more about that networking, letting people know that you're interested, talk to business owners. A lot of times, talk to a business owner, they're kind of not there yet, but then you get a phone call 2 or 3 years later. So it is a long time. And, I just spent about 4 months going down a path of a business that I thought we really had. And we spent a lot of effort on that, and it didn't work out. So there's those, and they require a lot of patience, but it's a lot better to really spend the time, get the right business. Because there's so many things that if you get the right business, it can really change your lifestyle, change your economics, give you the freedom to spend your time on things that are not related to a paycheck. Just give this freedom. But the opposite is also true, where if you buy the wrong business and it didn't have the right fundamentals, and it you didn't do a proper due diligence, then it can really put you in a sticky situation really quickly, and really take away your net worth. And again, we go back to gambling if you're not doing all the homework and all the due diligence that's required.
Do you think it's safer if obviously you have the capabilities and the funding to buy a bigger business than a smaller businesses? Because I think one of the example that you had in the book is a long time owner who are aging out. Obviously those people don't advertise. They just close the business, close the shop, and that's it. But you had a relationship with them and let them know that you're actually interested in purchasing. So you get that call. So that's a perfect fit. But without that opportunities, then it's safer. And obviously, if you have the backup, to go for a bigger company with employees and proven cash flows.
Yeah, I think finding that level or sizability is a balancing act between is it achievable? Is it within my scope to put together the, investor group, and whatnot, versus if you go too small, you're kind of back into that startup phase. You're just taking somebody else's new business and passing those headaches onto you. So the business, I guess, start with what level of income do you need from your business, and what do you want that relationship to be with your business? Because you don't want to just go in and buy a job, work harder, longer hours than you had in your employment, but now you have more hassles, and it just don't buy yourself a job. And the other issue with the smaller organizations is they tend not to have enough structure and processes in place to really achieve what you want to achieve, which is focusing on the business instead of grinding out in there. So they're just not refined enough, and you end up being in the trenches for a lot longer, and that's not that productive. The reality is it's actually no harder to run a larger business, and it's actually easier because the due diligence, they're going to have a lot cleaner paperwork to analyze them. They're going to have stronger history. They're going to have stronger processes. But once you purchase it, it allows you to maintain or put people in place that are experts. So you're not doing individual management functions. You have and can afford people and expertise to manage each function of management, whether that be bookkeeping, HR, or operations. And then you can free yourself up to really do what you need to do to grow that business. Where in a smaller business, it's like you're working harder and you're working on the wrong things. So achieve at least the scalability where you get over that threshold of it's mature enough to have processes and systems and structure in place. And that's what you're really buying, is the systems and this kind of well-oiled mechanisms.
Do you think it gets easier? Because I want to ask you how many deals and transactions you have been with, and when you form a team and you know who to reach out to, does it simplify the process? And that if I have such a business, then this type of bank will be good for me, or this investor are going to like this type of deal. Is it things that you could really improve on if you keep going at it?
You get better. You probably work as hard because it's in your blood. I'm not sure if this is a Ray Dalio quote or where it came from, but he talks about the Olympic athlete's job not being any easier than the amateur. It's just what you do, and as you go to a next level, different challenges come, but the challenges become a little bit more exciting and a lot funner because you have a team around you and you have this competent team. So you're not really fighting fires or emergencies. The things that you're working on is a lot more strategic and structured. And as you grow that business and you grow your revenue, you can start to step away from the business and really be a lot more methodical and purposeful about where you want to spend your time. And at that point, hopefully it becomes a choice and a lifestyle if you want to work hard. Just listening to a podcast the other day on Jim Pattison, is I think 92, is hits the rich list here in Canada for the Jim Pattison group. And he's 92, goes into the office every day, has many very significant companies, but what he does when he goes into that office is going to be the things that he enjoys, and can spend his time on just communicating with his experts in-house.
Yeah, I think I wanted to share this quote, and it's one of the reading lists from your books, from Grit by Angela Duckworth. So actually, I'm in the beginning chapter of the book, but one thing that I wanted to put it in front of my desk is she said that talent plus effort equals skills. And if you have skills and effort, that's how you have the achievement. So it's just like what you just talked about. So you can really be talented, but then you never make any effort, then you have no skills. But, like acquiring a business, once you develop those skills and you still keep on working with it, that's how you can make that achievement. How, there are some people just walk into something that, then they will buy a business or able to see what can improve in the business, turn it around, and probably resell it or even take it public, and make a lot of money. So, but then it is I want to say it's safe to say that you cannot do it in one day, but then if you keep on working on it, and
Mhm.
I'm sure that you have been reading a lot of books about the process, and that's how you can improve and get better.
Yeah, I think incremental gains is, a lot of the work on that kind of previous work on wealth talks more about incremental gains. So a lot of the successful entrepreneurs, they really just got those little gains every year and compounded on their achievements. And over time, over a 10-year or 20-year period, that's what built them significant things. And that allows for your wealth to also follow this kind of nice ladder or staircase. Because you have that security and that methodical process where, I keep going back to the startup and comparing that to the acquisition where, you're really taking on a big risk. You're risking your existing wealth in this anticipation of making more. So you're trying to leapfrog. So sometimes when you take one massive leap forward, you get hit and you have to retreat and lose what you gained. Where the acquisition, if you kind of look at what am I buying, what's the definition of an enduring business that thinks through risk mitigation, it really allows you to go back to those incremental gains, and everything that you do, you're not risking what you've already achieved, whether that be personal or thinking through it as wealth retention.
Okay. I want to ask you more about the grit and grind. So what is it, and you know, how does it do to help an entrepreneur?
Yeah, so in the book, over my readings and reading 100 and some books and thinking through my own experiences, I came up with 4 or 5 factors of what makes a successful entrepreneur. And they're not things that we would learn in business school. In business school, you think more tactical in terms of, accounting and strategy and operations, and those things are important, but they can either be learned or outsourced. And what makes more of an entrepreneur is, being self-aware of both your strengths and your weaknesses, and reacting to those, being accepting of failure and being able to learn from that and move forward. Accepting of chaos, or embracing this chaos. But the one that, so those are all important, and that's kind of what stood out to me in the literature and reading biographies of people that I feel are successful and good models. But at the end of the day, even those are important, they're almost secondary if you get this next one right, and that is perseverance. And it goes by a number of names, whether that's grit and grind, or like stick with itness or stickability. And if you do that and you just keep pushing and you keep learning and you keep pushing, success is really inevitable. You can't fail if you're still going. You might have setbacks, but if you keep pushing and you keep getting up, really success is inevitable. And that just seemed to be this theme of reading biographies, and they all have these setbacks. They all have these, whether they're failures or minor hurdles or catastrophic, they just kept getting up and moving forward. And that to me was kind of stood out in this literature.
Okay. So what's next for you, Greg? So you have done all this great achievement. Are you happy with where you are, or with your skills right now, you actually want to go out and look for something bigger and better?
Yeah, I don't know if content is a good word or not. I think you take and embrace some successes that you have, but once you have that and you have good people in place, and anything I do, I've had really strong partners that tend to be a little bit better at the operations than I am. So that allows me to step back, and the more I can step back from the businesses, somewhat quasi paradoxically, they actually do better because I can think a little bit more methodical, and if I can contribute in a bigger way, make 3 or 4 or 5 good decisions a year, and let somebody focus on the daily tasks and be an expert and better than me at those roles. So right now our business is it's in a really good spot, our primary one. So we're just thinking, okay, what's next for us? And a lot of it is just trying to continue to follow the playbook in the book. Really is be really methodical, look for that next business, but look for it very strategically. Make sure it has the fundamentals where it's going to be an enduring business. It's going to be here in 20 years, whether I'm still the owner or somebody else is. But it's about not risking or losing what we have. Just keep pushing for those incremental gains. Very purposeful and surrounded by people that are very thought oriented and a lot smarter and a lot better at their jobs than I am, and just surround yourself with those people and tag along for the ride.
I think the most important lesson that I have learned in my entrepreneurial journey is you got to accept there are always people out there that are smarter than who you are.
Mm-hmm.
Some of us couldn't get past that. I have to be the best in my company. I always have to be the best. But that's where you are going through your bottleneck, because at some point you have to work with partners, or you have to hire a professional that is way better than you in certain tasks and what you can ever dream of doing. And if you're able to get past that, then that's how you can start having those goals, because they, maybe once you work with them, they could do what you can do in 5 years. So, think about that. If you are thinking about you getting stuck, or if you're not getting far enough of where you want it to be.
Yeah, I agree. And I can tell when you do the podcast and I listen to your podcast, you're always very engaged and very listening to what the other person has to say and developing yourself. So you can tell. I think that's what the journey is about, is just continue to develop yourself. And, one anecdote for myself on our first businesses for, the first 5-8 years that we had these, I always was the hardest working person. So I'd show up, be the first one there in the morning and the last one to leave. And, I felt, maybe it was in my ego, but I felt it was important for staff to see me working and see me working hard. But that never really progressed those businesses. It just made me a good employee, but it didn't make me a very good leader. And our businesses never really made that next step. But once I realized to kind of step back and think, surround yourself and just let people do their job, I can start to work on the right things, and again, just let those experts do what they're good at, and surround yourself with those people.
Yeah, thank you so much for the advice. For listener grade that wanted to reach out to you and have maybe specific questions of their own, what would be the best way to reach out to you?
Sure. I guess my website, it's gregbott.com. There's I guess a little bit more about the book on there, a little bit about myself, and there's also, if your listeners want to contact me, is a good way to do it as well.
Yeah, I would strongly suggest everyone to go find the book, Faster, Safer, Wealthier. Tons of information there, and then the first few chapters, Greg just describe the entrepreneur journey. There are some questions that you have to answer for yourself before you actually go and search. Then he's not suggesting that first day you go and search. You actually have to find out the why, and then also why you passionate for. So definitely check it out. And thank you so much for coming on to the show, Greg. Been wanting to chat with you for a long time.
Thanks, Swire. Really enjoyed this one.